2025 April, we began with historical high number of GST collection, which is about 2.1 lakh crore. Now, who is giving this kind of tax? Where this money is coming from? Let me ask you this question. If there are no activities in and around our economy, where does this money coming from?
गुड इवनिंग एवरीवन, आप सभी का स्वागत है हमारे इस मार्केट आउटलुक वेबिनार में। आज मैं उन लोगों का भी स्वागत करना चाहता हूं जो हमें लाइव ना देखते हुए हमें यूट्यूब चैनल के थ्रू देखते हैं और हमारे इस मार्केट आउटलुक वेबिनार को बहुत प्रशंसा करते हैं और गुड विशेस उनका हमें मिल पाता है। तो आज मेरा उन सभी लोगों का भी मैं स्वागत करता हूं। और मुझे लास्ट टाइम कुछ मेरे जो व्यूअर्स हैं उन्होंने क्वेश्चन किया था कि आप अपने इस रिसर्च टीम के बारे में थोड़ा बताएं, तो आज मैं वो पहले कवर करना चाहता हूं कि हमारी एक 6 लोगों की रिसर्च टीम है जिसमें काफ़ी एक्सपीरियंस लोगों को हमने जोड़ के रखा हुआ है, जिसमें CA, ICWA और MBA फाइनेंस के लोग हैं जिनका 15 से 20 साल का तजुर्बा है इस वेल्थ मैनेजमेंट में और इस मार्केट को वो 15 से 20 साल तक कवर करते आ रहे हैं। तो ये जो रिसर्च जो हम आपके पास लेकर के आते हैं हर महीना, ये हमारी कंपनी का ओन रिसर्च है जो मिस्टर विकास अग्रवाल जी, जो हमारे फाउंडर और CEO हैं AIF PMS एक्सपर्ट इंडिया के, उनके निर्देशन अनुसार और उनके नेतृत्व के अंदर जो है ये रिसर्च टीम काम करती है। और जो सारे डेटा पॉइंट्स है नेशनली, इंटरनेशनली और आने वाले समय में मार्केट का ट्रेंड क्या होगा, हमें किस तरह से करंट मार्केट सिनेरियो में रिएक्ट करना चाहिए, तो ये सारे डेटा पॉइंट्स के ऊपर हमारी रिसर्च टीम काम करती है और उनके दिशा निर्देश के अनुसार, उनके गाइडेंस के अनुसार हम अपने क्लाइंट्स को गाइड करते हैं कि आने वाले समय में आपको क्या करना चाहिए और किधर निवेश करना चाहिए, किधर इन्वेस्ट करना चाहिए ताकि आपको वेल्थ क्रिएशन में इफेक्ट। तो आज हमारे साथ इसको मार्केट आउटलुक वेबिनार को कवर करने के लिए हमारे फाउंडर और CEO मिस्टर विकास अग्रवाल हैं। इनका अगर मैं इनके बारे में बात करूं तो इनका 25 साल का तजुर्बा है इस वेल्थ क्रिएशन में और इस मार्केट में इनका 25 साल का तजुर्बा है और इन्होंने अनेकों HNIs और इन्वेस्टर को हेल्प किया है उनके वेल्थ क्रिएशन। तो समय ना गवाते हुए मैं विकास जी को आमंत्रित करूंगा कि आज का वो मार्केट आउटलुक कवर करें। Over to you.
Thank you, Samir. Can you hear me?
Yes.
Okay. So firstly, I would like to take this opportunity to thank all our investors for taking their time out from their busy schedule and joining the call. As you rightly mentioned, that our attempt is to, the kind of exercise that we are doing at AIF and PMS Experts India, our attempt is to basically educate and empower the investor community as a whole and try and add value in terms of various data points. So, in our market, unfortunately, there's too much of noise and there are very few who are able to bring out the relevant data points and able to share with their clients. So we thought we will take first step towards that. We'll try and collate the data, what's happening around the globe, what's happening around in India, and share those data points with our investors. And it is up to them to draw a kind of conclusion what is required and then take the call accordingly. So without any further ado, I'd like to start. So, I'm starting in a very, very uncertain times when we saw recently what happened between India and Pakistan. What we are also witnessing is the global trade war which is going on across the globe. So today's discussion is going to be around that. So what we have done is we've divided the whole presentation in 2 parts. The first part we want to talk about what's happening globally, and then second part we'll talk about India as an economy, where are we headed. So let me begin by saying that the first part is, all of you know that after the Donald Trump became the president of US, he started up with this tariff war. You can see my screen, right, Samir ji?
Yes. Screen is visible.
Okay, great. So, what I told my team is to give us the Nifty, the benchmark figure. as in when the whole saga began, the trade war began. So it actually started on 1st of February. And I was looking at that, what was the Nifty level? And that day when he announced for the first time he's going to impose tariff on Canada and Mexico and eventually China. That's how it started. Then it got postponed. So आप अगर देखेंगे Nifty का level, so Nifty till about 13th of February was holding on to 23,000 levels. And then in the month of March, it fell down, and then it was anywhere between 22,000 to 22,500 level. And the whole thing was going on where they were talking about putting too much of tariff on India as well. uh, but markets जो है आपने देखा होगा 23,000 से 22,500 के बीच में रहा है. 1,000 निफ्टी के 1,000 पॉइंट्स के here and there देखने को मिला है. This is the trend that we saw. During this time, by the way, a lot of people said that, you know, this war is happening after 100 years and anything can happen and blah, blah, blah. But then Indian markets, you see the kind of resilience it has shown. Despite global markets were down to the tune of 10-11%, during this time, our markets were down by only 4 to 5%, and we saw immediate recovery happening in April. In fact, in the March itself, towards the end of the March, we reached to a level where we started the whole thing in the month of February. So this is what we believe, that US and China, when they have these kind of trade wars, it has a different implication altogether across the globe, because they are the major economies, US and China. So combined, US and China contribute almost 25% of the global import and export. So obviously it will have its own impact if they fight with each other. And both nations have a comparable share of global imports also, which is about almost 13%. And no denying on the fact that China happens to be world's largest exporter, accounting for almost 17% of the global exports. तो आप यहाँ पे देखेंगे, if you look at the data, prolong the trade war, the tension between these two countries, major countries. पहले US said will put 10% tariff on China. Then he said 20. Then March 12 they said 20. Then karte, then in April they said 30. Then they went up to 104. On April 10th, Mr. Donald Trump announced that they will go up to as high as 145, because they were also retaliating with their own figures. China said initially in April, first month they were only observing. Feb, March, 2 months they were observing. Then they said in April they'll charge 34%. Then they went up to 84%. Now from the last 1 week, what we are hearing from other people is that both the parties have agreed to come down to much lower number, which is again in the tune of 20% around. So that's a big news for the globe, because if these two countries fight with each other, the entire globe can go on recessions. So obviously there has been a lot of discussion which is going on. This is the global macro. So IMF, is internationally one of the largest organization in terms of predicting growth for the globe. According to them, what they were expecting the growth to be about 3% for the globe, across the globe, as in the world level growth would be about 3% is what they were expecting. Let's look at the figure. So 2024, the world grew at the rate of 3.3%. And this 3% of projection has come down to 2.8% in 2025. And next year, it is likely to inch up to 3%. So because of the tension that we have. But otherwise, you look at US had 2.8% of growth in 2024, which has come down to 1.8 for 25 this year. And next year, likely to be 1.7. Let's look at India. India, we had 6.5% of fantastic year growth last year. And this year, the projection from IMF is coming that it is going to be 6.2%. although we began the month with the good GST collection. But having said that, if IMF is projecting these numbers, so I'm sure they would have thought twice, and they believe that in 2026 our growth will be 6.3%. So even if you consider this, essentially I'm trying to tell you that it is going to be double than the globe, the across the globe. I mean, when you look at the numbers, and maybe 3 times or 4 times with some of the large countries. This clearly indicates that India happens to be the fastest growing engine, number one. And number two, I'm very happy to share that now we have emerged as, officially, I'm telling you, fourth largest economy in the world. Because recently RBI intervened in the rupee, and the kind of volatility we saw in the rupee after they intervened. Now, in terms of number, we are now fourth largest. So Germany is the Germany and Japan. These are the two countries. But when you look at their growth, 2025 Germany is likely to have 0% growth, and Japan will have only 0.6% growth. So it's like a train coming on the opposite direction they're traveling. So India is coming this way and very likely to pass by very soon in terms of growth. This is the stance of the Federal Reserve. They're doing fantastic job despite the warnings coming from Trump government that they want to fire the chairman of Fed, but they continue to do good job. They maintained their stance at 4.25% to 4.5%. US में क्या होता है? They look at three things. In India, our way of projecting things is different. We look at GDP, and mainly RBI looks at inflation. But there they look at GDP rate. In US, they look at unemployment rate, and they also look at inflation. And based on that, they decide the interest rate. So unemployment stable at historically low levels. Inflation out there is somewhat elevated. Policy outlook is data-driven, risk-aware. Balance sheet action, ongoing reduction in treasury and MBS, and mandate target is maximum employment, and 2% inflation is what they are targeting. Now, what Mr. Trump is trying to do is to balance the imbalance the economy had, as in, that every $2 that they spend, because they print a lot of money in the US, they are able to generate 50% of that as GDP, the real production. So if they spend $2, they get the GDP of $1, which means that 50% of the overall money goes away, and therefore, as a result of that, the the debt to GDP ratio, debt to overall balance sheet ratio in US is very high. They have $36 trillion of debt, which is very, very difficult. So they have current account deficit, they have fiscal deficit, which is too high. So what Mr. Donald Trump is trying to do is to see to it that how do you have balance of that. And look at the US international trade. This is the number of the March. They had about $163 billion of deficit. This clearly indicates that if they continue to have war, they're going to be in big trouble. Now, everybody wants to know what's your views on gold. Well, if you look at particularly gold as an asset class, it has really delivered very good returns in the last 5 years. I was looking at the data and talking to one of our investors. He happens to be from Pune. I saw that the gold portfolio delivered about 11.5% returns in the last 4 years. Clearly, this appreciation is because of, one, the investment demand is increasing. By the way, the jewelry demand is weakening. And in fact, we've done the due diligence, and I was speaking with one of our client who happens to be a jeweler, told me that overall demand for jewelry is going down because of the rate appreciation. But the central bank is continuously buying gold. Both India and China have the highest amount of exposure in terms of importing the gold in the last 2 years. And as a result of that, gold's performance in terms of returns from an investor point of view has been very good. This is a very interesting data, which is PMI data. Now, what is it is basically Purchasing Manager Index. Now, what does it do and how does it help? Now, for the first time in the month of April, what we saw, and these are, by the way, data points that I am representing, I'm not creating any story out here. This data clearly indicates that India has 58.2 uh, uh, as I mean percent as PMI index, which indicates, so anyone who is below 50 considered to be negative. Anyone who's above 50 considered to be very good. 58 is a very good number. So in April, we saw that India led with a strong performance of 58.2, is basically giving an indication that economy is witnessing robust activities, followed by US, which is at 50.2, and China, which is 50.4, where we saw a moderate growth. 2025 April, we began with historical high number of GST collection, which is about 2.1 lakh crore. Now, who is giving this kind of tax? Where this money is coming from? Let me ask you this question. If there are no activities in and around our economy, where does this money coming from? And when you compare this with last year, clearly we see that this is absolutely record high level. 2.1 lakh crore of GST has come. I remember 10 years back when I used to analyze the balance sheet of India, we used to have 6-7 lakh crores of overall budget, which used to be, which our, ex finance minister used to present. Now look at our GST collection itself has reached to now 2,10,000 crores month on month. This clearly indicates there's a huge strong growth. The economic resilience is sound and clear visible. The robust import of gold and strong fiscal position. Another thing is that RBI, they are always worried about inflation. Now, the inflation number, as far as food inflation, it has come down to as low as 1.64%. And overall inflation number has come down to 3.16%. This is the best time for RBI. I mean, I'm sure they must be enjoying their time, because their internal target of inflation number is 4%. And this is below 4%. It's absolutely a fantastic time for RBI. India's trade. So basically, just want to highlight that, last year, when you look at the numbers, we had about $437 billion of export, but at the same time, we had about $720 billion of import. So we overall had about $282 billion of deficit. And this is only because of, that we are the largest importer of crude oil, which is about $122 billion itself. And I've been telling you that India as an economy trying to accumulate as much gold as possible. In fact, last year, both China and India put together accumulated almost 70% of the overall gold collection, gold accumulation that the globe has done. So, because of that, and by the way, gold's number is $58 billion, which is very significant. So both 122 and 58, which is about 175. So out of $282 billion of deficit, $175 billion is only your crude and gold. So this number clearly indicates that because of that, we had this kind of deficit. But government is trying hard to see to it that they have kind of bilateral agreement with most of the other countries. Recently, they've concluded the same with UK, and also trying to speak with UAE, Arabian countries, and see to it that how do we ensure that our export number should go up. India will grow only when it becomes a major player in, or it becomes a sort of meaningful player in the global supply chain. If that doesn't happen, then we continue to see issues coming up. Now, as far as forex reserve is concerned, reasonably, India is at reasonably well positioned, as in we have about almost $686 billion of reserve in terms of dollar. And we saw some amount of volatility last month because RBI had to intervene because of the change in the price of the uh, rupee. Monsoon. So अभी ये कैसा लग रहा है? So monsoon, there is a forecast which has come from IMD. It clearly indicates that 105% chances are there that this year we're going to have a above normal monsoon. Probability is 59% chances of rainfall, which is above 104%. So this time is going to be very supportive. And what will happen after that? The rural demand will outpace the urban demand, and FMCG, two-wheeler, tractor sales, all that will be the beneficiary. Inflation outlook looks to be okay, controllable, and therefore banks, NBFC, real estate will do well. The agri inputs will, because of higher sowing and input demand, the fertilizer companies, agrochemical companies, irrigation companies will do well, and their time is coming, by the way. And energy mix, which is strong hydro, rural power demand, will have uptick. And as a result of that, power utilities, equipment suppliers will have very good time. Uh, this is the data that I was looking at, where we thought, let's look at and examine the private sector capex. We always talk about government sector capex. The government is this time decided to spend about 11 lakh and 34,000 crores. And by the way, very first month itself, they have achieved their target despite what was happening between India and Pakistan. So this clearly indicates that this government is this year, because last year they could not achieve their target in terms of taking the capex. This year they want to utilize this opportunity. So earlier they were only focusing on capex led growth, but now they're focusing on capex and consumption both, and therefore they have given a leeway to people who earn up to 12 lakh rupees, that they don't have to pay any income tax. That will add a lot of story to our consumption in the economy, and give the strength. Overall, people talk about that private sector does not contribute to the overall capex, but I thought I'll pull out the data and showcase it to you. So when you look at aggregate capex rose by 66.3% from 3 lakh and 94 lakh crores between 2021 to 22 to 6 and 6.5 lakh crores between 2024 to 25. Now look at the numbers. So clearly private sector is also committed to take capex, and as the utilization capacity is increasing, they have been continuously taking capex. I agree to the fact that the kind of major units, major capex which used to come during our 80s and 90s are not coming on our way, for sure. But the mid-size SMEs, MMEs, they have been doing a lot of capex. And as a result of that, this number clearly indicates that. When I talk about large is what, like you saw Reliance putting a big plant, or maybe L&T putting a big plant, or maybe you had PSUs like NTPC, BHEL. Those days used to create employment up to 3 lakh, 4 lakh people. All those big projects are not coming up, for sure. But the mid-size, which is anywhere between 10,000 to 1 lakh employees, they are doing very well, especially in some pockets like Gujarat or Tamil Nadu or Karnataka. I mean, these are 3, 4 places where we see good amount of growth coming up. 53% of the capex is directed towards machinery and equipment. That is also a good news for our economy. Otherwise, what used to happen is that the second generation doesn't want to do the same thing what his father was doing. For example, if they have a market cap of 100 crores and they've made a profit of say 50-60 crores, the second generation of the promoter doesn't want to go to the plant and lay their hands down and make it dirty. They want to just invest money in mutual funds and talk to people like us, and try to invest money in markets and enjoy 15%, 16%, whatever. But good thing is that that also is getting reversed now in India, and there are a lot of good promoters who are ready to take this kind of capex and start investing money. This is the FPI's data points that we thought I will show it to you, last 10-15 years of data point. So last year we saw that 2024 we had 14.6, almost 15% of withdrawal, and this was witnessed in 2021 also, which is about 17% higher than that after COVID. उसके बाद में आप देखेंगे कि then we had 28% of FPI's money coming in. But whenever you read any newspaper, they keep talking about FIIs have been withdrawing. But look at the data points. In 2020 alone, they injected the liquidity of almost $37.5 billion. And even in 23 and 24, they had about 28 and $25 billion of fresh inflow coming to India. I agree that last year they had, because of the global uncertainty, they booked their profit loss, whatever, and went back to US because they were expecting this kind of a tariff war to begin. But now that the things are settling down, I'm glad to share that even in the month of April, they have been the net buyers. On the other side, let's look at debt. So as you know that from last year onwards, we started getting money in debt. We never used to get good amount of inflow in debt. But last year we had about 2024, we had about $13.7 billion of fresh inflow coming, which is helping Indian corporates to grow. And last year we saw $6.1 billion of positive money. So out of 14, which went out, $6 billion has come back in the form of debt. So the total net outflow was only to the tune of $8 billion, if you have to look at that way. And where this money came in April, it more or less came in financial companies, banking and financials. So banking and financials saw major amount of inflow. This is the global index of last 1 month. Clearly, India has shown its remarks in terms of delivering 3.46% of returns, whereas US continues to be down. UK was down about 1%, Taiwan was down about 2%, Hong Kong was down about 4.5%, overall China was down about 4%. This is the index, so major recovery coming from reality business, the PSU banks, the private banks because FPIs have been buying private banks and NBFCs, and Nifty Pharma and oil and gas. What we saw going against us is Nifty metal because of the global metal prices having too much of volatility. Both domestic and FPIs were not comfortable deploying their money out there, and therefore we saw 5.62% of negative growth out there. And so is the IT because of what was happening in terms of tariff war. This is the major index. So Nifty 50 has about almost 15% of volatility, and the P ratio is about 21.94, which is 22. So here we saw that Nifty Next 50 had the highest level of volatility, which is 22.52%, and the P is at about 21.92%, which is almost almost 100%. And the small cap also had the similar sort of situation. They had 23%. But otherwise, when you look at Nifty 50, even when you look at Nifty 100, it was a stable volatility. Valuation and volatility analysis again for some of the sectors like auto. Auto, we saw huge volatility of 21.03%. Banks were much volatile at about 17%. FMCG was much lower than the overall index, which is only 14.92% of volatility, whereas the P ratio of FMCG is at 44. You see, almost one third. So FMCG is a very stable segment, continues to be very stable even during this year. This is what we pull out every time and showcase it to you. This data is basically the historical data. We try and compare with 1 year forward data of Nifty P. So historically, the long-term average of Nifty 50 is about 18.8 to 19, and we are at about 20 and a half. So there is about 10% of premium to the historical average. So nobody can say that we are cheap. We are not cheap. We are not expensive. We are somewhere in between. All I can say in terms of valuations. The mid cap is trading. Historical P is about 15. Current P is at about 29. So there is 17% of premium. And small cap historical P is 17.4. And current is 1 year forward is 24.1. Market cap to GDP, while it is not so relevant because historical numbers were very poor, but still it is at 128.6%. There's an interesting study done by us. So there's something called advanced decline ratio, that how many stocks are on an average going up and going down. So, advance is going up, decline is going down. And, when you look at particularly, see the numbers, how it is improving. Last year, June, we had about 1.24% of advanced decline ratio. And it was coming down to the month of February. We saw only 0.61. And now again, we saw in the month of April that this number is improving. This clearly indicates that overall markets are getting into positive zone. This is the called volatility index. It spiked up to large extent, but from 13.78 on April 1st, it is plunging down to now 13.6%. So it is also settling down. But obviously, because we were in uncertain time, uncertain world, uncertainty because of the trade war, the war between India and Pakistan, obviously the VIX was trading at all-time high, but now that it is settling down. This is the data that I picked up. Well, I don't want to talk about the war per se between India and Pakistan, but clearly our army has done excellent job, and a lot of respect for them. But I picked up the data what happened last time when we had war, Kargil war between India and China, and I was very vocal, and we were speaking with all our clients, and we were telling them, advising them that it's a very good opportunity to enter into, but it happens that when you are in too much of pessimism, you don't invest your money. But my experience clearly suggests that when things are really looking absolutely coming to an end of the world, I think that is a time that you should enter into equities. So we picked up the data and we saw that 1998 had about 6.6% of growth in India, and 1999, because of the war, it came down to 6.4. So very, very slight dip, and it recovered very well. Agriculture growth was bad because there was no rain that particular year, but it had nothing to do with war per se. But look at industrial production, it went up. Rather, it should have gone down from 4% to 6%. Very, very strong rebound. You had electricity, which is 6.5 to 6.6%. It went up. So these data clearly indicates that even during the Kargil war, Indian markets did not find too much of challenges. So this time was no different, and you saw how India recovered very well. With that, I would like to conclude my presentation here, and I'm happy if you have any question for me, Samirji.
Thank you, Vikas ji. कुछ क्वेश्चन पूछा है हमारे दर्शकों ने। तो पहला क्वेश्चन ये है कि लोग पूछ रहे हैं कि विकास जी, आपको क्या लगता है कि ये जो रैली स्टार्ट हुई है ये कंटिन्यू होगी कि अब स्टिल कुछ करेक्शन आने वाले समय में आप देख रहे हैं मार्केट में?
देखिए, बहुत मुश्किल है समीर जी। इट्स इम्पॉसिबल फॉर एनीबडी टू थिंक दैट वेज or to predict what is going to happen tomorrow, because we are living in a very uncertain time. So very difficult to predict. But what I'm trying to tell you is that, let's look at the broader perspective. Okay, your inflation number is very much under control. Your current account deficit is well controlled. Your fiscal deficit is prudent. Your GDP growth is double than most of the countries across the globe. Your forex reserve is well maintained. Your overall growth is at 6.3%. Look at the number of major issues that market. Your interest rate cycle is, the RBI stance is accommodative and it's going down. Your liquidity is increasing in the banks because the CRR has been slashed down by almost 50 beeps. Your interest rate cycle has been reduced by 50 beeps, and RBI is going to revisit what will happen to that. Your the war between India and Pakistan looks to be settled down, and this time India has demonstrated its capability that if you do anything wrong with us, we will showcase the world. An entire world has witnessed the capability of our country, and this only positioned our economy much better across the world. A lot of people who used to think that India will never do anything have realized the kind of war and the technology which is used by our armed forces clearly demonstrated our capability, the homemade instruments, and therefore the defense sector per se looks to be extremely good, both from an Indian point of view, internal consumption, and external selling point of view as well. So what I'm essentially trying to tell you is that, what are the major concerns in the economy? What is it that you see? And let me ask this question to you instead of I am answering this. And by the way, we are coming from a situation where we had seen major outflow happening by FPIs, and I just shown you the data historically आपने ऐसा कोई साल नहीं देखा होगा जहां पे लगातार 3 साल FPIs ने बेचा होगा. एक आध साल बेचते हैं, then very next year they have no option then to come back. कहते हैं कि सुबह का बुला शाम को आया तो आता ही है.
Right.
Because they have no option. And the world is also kind of agreeing to the fact, and as we become fourth largest and third, fifth, from sixth largest to fourth largest, you will see that, or maybe third largest 2 years down the line, you will see that people will have more acceptability for India as an economy. So you are coming out of the zone where from the last 1 year markets, they were struggling, especially from September onwards. We saw that markets started declining. You had almost 250,000 crores of assets going out by FPIs in India, and the valuations are at stable level now. Your PMI numbers are increasing. Your GST collection is increasing. Your net collection of income tax and the number of income tax pays are increasing day by day. Your consumption story looks to be very strong. You have consumption-led growth and government capex-led growth and private sector participating equally. To my mind, I think it's a time to accumulate equities as much as we can, but not to compromise with your overall asset allocation discipline, which is more important. So if you are underweight in equity, I think you should start deploying money. Not to forget that mutual fund guys are sitting on huge cash. Last time when we looked at the data, they were sitting on more than 3 lakh crores of cash, which is to be deployed, because every month they collect about 25,000 crores of money in the form of SIPs. Where would this money go? So I think to my mind, as far as equity market is concerned, uh, of course, anything here and there is okay, but we don't see major concern because politically also you have a stable government. There were a lot of perception that Modi government may not be able to run this economy, but run this uh, along with the other allies as an NDA, run this government, but they are kind of they're showing every time that they are successful. So to my mind, I think if you are underweight in equities, you should start accumulating. If you are overweight in equity, don't forget the asset allocation rule and start, as in when the markets are going up, start booking your profits.
दूसरा क्वेश्चन है विकास जी की बहुत सारे एक्सपर्ट्स अभी भी मानते हैं कि इंडिया में जो इक्विटी मार्केट का वैल्यूएशन है वो थोड़ा सा एक्सपेंसिव है, और कुछ लोगों का मानना है कि नहीं, ये राइट वैल्यूएशन है जहाँ पे आप पैसा डाल सकते हो मार्केट में, आप ओवरवेट जा सकते हो इक्विटी पोर्शन में। इसके ऊपर आपका व्यू क्या बनता है?
देखिए, ये बात सही है, मैं इस बात से एग्री करता हूँ कि वैल्यूएशंस, मैंने अभी आपको स्लाइड भी दिखाया है कि लार्ज कैप is at 10% of premium, mid cap is at 17%, and small cap is at 28% of premium of the historical low, the historical average numbers. I agree to that. But what I am essentially trying to tell you is that my sense is that India will command these kind of premium going ahead also. I don't see that because of the demographic dividend the country has, and because of its own runway for next 10 years, India will continue to demand its premium. You cannot compare this with China. So while I agree that Chinese valuation is at much lower level, for example, our large cap is trading at 21 ka P, they are at about 13, 14 ka P. So no denying on the fact that when you compare this with China, obviously Chinese market in terms of valuation looks more attractive. But look at the growth rate also. So our growth rate is highest as far as global economies are concerned. So I don't think that it is going to slow down anywhere. But yes, at the same time I would suggest all our clients to be little cautious about the valuations and see to it that if you invest your money, see to it that your portfolio, what is the aggregated PE of the portfolio vis-a-vis the markets, and then deploy funds. This is what we do.
Okay, Vikas ji, thank you very much for your time and for your data points which you had shown in this PPT or in this webinar. So definitely I feel that this data point and your views definitely will help our investor to invest in equity market. So thank you very much, Vikas ji.